Welcome back to Yahoo Finance Live, everyone. You might be taking a look at Bitcoin and wondering what's happening because Bitcoin's correlation to the S&P 500 hit a 17-month high, according to CoinDesk. Now, that's a far cry from its early days to its shift to digital gold to now its current tracking. Well, let's get the latest on what's happening with crypto and digital currencies with Emily Parker, CoinDesk's Managing Director of Global Content. Great to have you. So, first of all, Emily, when you look at this most recent rally for the major coins over the past 5 days, Ethereum is outperforming Bitcoin. Why are we seeing that?
Well, with the usual disclaimer that nobody ever really knows, there's a lot of interesting things happening on Ethereum specifically. So for a long time, there has been a software upgrade that many people have anticipated for Ethereum. That is coming in the not too distant future. And that could have a really massive impact. It could increase transaction speeds. So there'll be like thousands more transactions per second. And importantly, it will address this concern over energy use and environmental destruction by moving from proof of work to proof of stake. So that's definitely one reason. But there's so much happening on Ethereum in general, everything from the NFT boom to decentralized finance. So it's not that surprising when you just look at how many people are actually using Ethereum and using DeFi.
And as you mentioned this, in terms of an inflection point for Ethereum, a lot of delays, though, and expectations regarding blockchains going from proof of work to proof of stake. For retail investors trying to make sense of this transition, something that's going to be happening on a live network, what do they need to know?
I think the two main things is that, again, it will be faster, thousands more transactions per second in theory. And also, there's just so much concern over proof of work because of its impact on the environment and its energy use. And proof of stake is one solution to that problem. So I think those are the two main things. Of course, there are a lot of other technical things involved, but for the average investor, I would say those are the two main points.
Now, I want to talk scrutiny here because obviously with this spike in trade between the Russian ruble and Bitcoin hitting a 9-month high, we have seen that the European Central Bank's president, Christine Lagarde, has said that crypto exchanges may be accomplices in circumventing sanctions on Russia. And she did add more broadly that crypto assets are being used in some dubious financial transactions. What are your thoughts on that and what that signals about where EU regulation on crypto and exchanges could be headed?
Sure. So it's not just the EU. I mean, we're hearing similar talking points out of Washington. Since this war started, there has been a lot of concern that Russians would somehow find a way to use crypto to evade sanctions. But many in the cryptocurrency community have argued that there's really not evidence to support that claim because cryptocurrency is just not that practical a tool for large-scale sanctions evasion. Just in terms of moving a large sum of money from one country to another without anybody picking up on it, it just seems dubious that that's possible. And even some within the US government have expressed doubt that a large-scale sanctions invasion via cryptocurrency is unlikely. So, I think it just sort of depends on who you ask. This is definitely something that regulators are looking out for, but some would say that this threat is exaggerated.
And obviously, after President Biden's executive order really exploring the risks and opportunities that come with crypto, we did see some warnings there when it comes to 401k managers there keeping an eye on not putting crypto in there. But then we also heard in terms of the digital dollar that was proposed that Fed Chair Jerome Powell weighed in saying that it should meet a certain criteria, saying it should be identity verifiable, like as we see with US bank accounts, in order to prevent money laundering. It should be intermediated or widely embraced by the current banking system and widely accepted as a means of payment. What are your thoughts on the difference that a digital dollar will actually make?
Yeah, great question. So, nearly 90 countries right now are actively exploring issuing this kind of central bank digital currency. The US has been dragging its feet. The US can't really decide if they want to or not. One of the main reasons that the United States is on the fence about this are concerns about privacy. So the fact that Powell said this is actually a good thing because one of the big concerns about a digital dollar, now remember, this is not Bitcoin, this is not Ether, this is a currency that is issued by a central bank. And one of the concerns over this is that means that the government will be able to track the transactions of ordinary citizens. And that raises a lot of serious concerns about privacy. I mean, even if you are making perfectly legitimate transactions, do you want them all to be tracked by the government? So the fact that Powell has said that a digital dollar should ensure privacy, I think is a very good step because I think that's one of the obstacles that is preventing the US from moving forward on this.
And it does seem that by having this centralized digital coin, that does seem to be some countries, at least their way of thinking, they're getting into some sort of cryptocurrency in some kind of way, even though that's not the case. But we are seeing some countries, including Thailand most recently, banning digital assets to pay for goods and services starting April 1st. And their main reasoning is their concern over financial stability of some of these coins and the impact that might have on their actual economies. So how does the crypto industry overcome these concerns about financial instability being an issue?
Yeah, I mean, the truth is that so Thailand, as far as I understand, has raised two concerns. One is money laundering. So, that's kind of linked to this whole, sanctions debate, this general idea that cryptocurrency is somehow used for these dark money. And I think as more people understand cryptocurrency in a more sophisticated way, they will start seeing that, it's actually, again, not that easy to move large sums of crypto without anybody noticing. And some very large hacks have been tracked by law enforcement precisely because transactions are recorded on the blockchain and they are able to track. It's not that easy to do, but it's possible. So that's one. But the other thing that Thailand raises is just volatility and the fact that using cryptocurrency for payments is just not that practical or efficient. And, they kind of have a point, right? I mean, if the price is constantly going up and down and it's a roller coaster, this isn't really the best means of payment. So I think that's just going to require a maturation of the industry and, for these roller coaster-like prices to settle down.
We do appreciate you joining us today with that update. Emily Parker there, CoinDesk Global's macro editor and CoinDesk TV anchor. Thank you for your time today.
Thank you.